Hi traders, this is Steve Marty, the market chartist for FX Explained, and our regular weekly macro watch update for the week commencing the 31st of January 2022. More hawkish Fed sees volatile stocks and a strong greenback. Let's kick off by looking at the macroeconomic and geopolitical developments from the past week. Well, the Fed prepared markets for a March interest rate hike with a more hawkish tone from Jerome Powell. We saw interest rate markets start to price in 5 rate hikes for 2022. In addition, the volatile environment has also been impacted by ongoing tensions between Russia and Ukraine, although a diplomatic solution is still being sought. US earnings season saw Microsoft and Apple post strong Q4 data and guidance, whilst Tesla's numbers were positive. Forward guidance warned of ongoing supply chain concerns. Now let's take a look at the global financial market developments from last week ending the 28th of January 2022. While the Nasdaq has started to base in it, equities were very volatile, the indices very volatile, but the markets did not make new lows. We did not go lower than the lows posted earlier in January, the prior week, and markets, although very volatile within the day, have started to put a basing formation in and did have relatively strong closes on Friday. US 10-year yields tried to push higher through the week but then backed off to lower yields and looking like a topping pattern for US and global bond yields. The US dollar surged higher with the anticipation of a more of a hawkish tone from the Fed. And risk currencies, the Australian, New Zealand and Canadian dollars were all significantly lower last week in reaction to concerns about the risk-off environment, but also to do with the strength in the US dollar. Gold futures plunged back lower after Wednesday, with the stronger dollar impacting negatively with the inverse relationship between gold and the dollar. But oil prices remained high despite the strengthening of the dollar. Oil prices did manage to hit new multi-year highs. And copper plunged back lower after Wednesday with a more negative tone in a wider range with that stronger US dollar. Now let's take a look at the week ahead commencing the 31st of January 2022 into February. While the Chinese Lunar New Year sees Chinese markets closed all week for the Year of the Tiger from Monday the 31st of January through Friday the 4th of February. We're continuing to watching for the potential for military or diplomatic developments regarding the Ukrainian-Russian tensions. On the central bank side, we get the RBA, the Reserve Bank of Australia, interest rate decision statement and press conference Tuesday, and we get the same from the Bank of England and from the ECB on Thursday. On the earnings side, we get Google, Alphabet, ExxonMobil, Meta, old Facebook, we get Amazon and Merck all of this week. And it's a very busy data on the macroeconomic side as well. So Chinese New Year, as we mentioned in here, markets closed all week. But on Monday, we get EU GDP and German CPI. We get the RBA interest rate decision on Tuesday alongside German retail sales. And we get the first of our PMI data, the global market and the US ISM manufacturing PMI Tuesday. Wednesday brings EU CPI and the US ADP employment change, the precursor to the NFP non-farm payroll data we get later in the week. On Thursday, we get the global market and the US ISM services and composite PMI data. Plus, we get those Bank of England and ECB interest rate decision statements and press conferences. And then Friday brings EU retail sales plus the Canadian employment report and the much-watched US employment report. So very busy data for both the macroeconomic data and also central banks next week, with the Chinese markets closed all week. I'm going to wish you all a great trading week. Please do stay safe out there, and I'll be back with you for another macro watch for FX Explained next week. So traders, don't forget to catch us on the next FX Explained Macro Watch and all the great content on fxexplained.co.uk.